From cracking Soviet codes for the Pentagon to building the world's most profitable fund with a staggering 66% annual return for 30 years straight.
The short talk is this. I did a lot of math. I made a lot of money.
This unbelievable story will blow your mind. A man whose story intertwines with both the intellectual rigor of mathematics and the fast-paced chaos of Wall Street. A floor sweeper turned investor whose brilliance led him to outsmart the markets using data and algorithms. But who is he? And how did he become one of the wealthiest men on Earth while remaining largely out of the spotlight? This is his story.
Born in 1938 to a Jewish family in Brookline, Massachusetts, he grew up in a middle-class home. His father was a manager at a small shoe factory. His parents, hardworking and dedicated, believed in the power of education. His Jewish upbringing, while not often the focus of his public persona, was an important part of his identity. It gave him a sense of discipline, community, and intellectual curiosity that shaped him as both a person and a thinker. As a child, his fascination with numbers was clear. He wasn't just interested in solving problems, he wanted to understand the very essence of how things worked. This intellectual curiosity would become the foundation for his lifelong success. At 14, during Christmas break, he was hired by a garden supply store for a stockroom job. However, due to his lack of focus, he was quickly demoted to floor sweeper.
Little did anyone know that this teenager would one day revolutionize Wall Street.
At the age of 17, he easily got accepted to the Massachusetts Institute of Technology, one of the most prestigious universities in the world. He quickly stood out, excelling in mathematics and diving deep into complex problems that left most of his peers in awe. By 1958, at just 20 years old, he graduated with a degree in mathematics, setting the stage for an extraordinary career. But he wasn't done. He continued his academic journey at the University of California, Berkeley, where he pursued a PhD in mathematics. By 23, he had completed his dissertation, specializing in differential geometry, a branch of math so abstract that few truly understand its complexities. But for him, it was a playground. In 1964, at the age of 26, he was recruited to join the IDA, Institute for Defense Analyses, a government think tank that specialized in cryptography. It was during the Cold War, and the US government needed minds like his to crack enemy codes. He developed a mathematical theory for pattern recognition that was so advanced that the NSA classified it for 15 years before it became the foundation for modern quantum field theories. But while his mathematical skills made him a key asset, his outspoken views on the Vietnam War would soon bring his time there to an abrupt end. Leaving IDA was a turning point. By the time he was 30, he had returned to academia, where he could focus on what he loved: math. In 1968, at the age of 30, he became the chair of the math department at Stony Brook University. He wasn't just a professor, he was a trailblazer. During his time at Stony Brook University, he conducted secret mathematics seminars in his basement, where he developed early theories that would later influence his trading algorithms. Only 3 of the original participants are known. During this time, he developed the Chern-Simons theory, alongside Xing-Shen Chern. This theory, though abstract, has had profound implications for physics, particularly in quantum field theory and string theory. He won geometry's top prize, the Oswald Veblen Prize, for the same, which later found applications in string theory and quantum computing. But despite his academic success, his hunger for new challenges grew. In the mid-1970s, he ran a small Colombian rug business during his time teaching mathematics in Bogota, shipping hand-woven carpets back to the United States. However, everything changed in the late 1970s. His attention had turned to the financial markets. He believed that the same mathematical principles he had applied to geometry could be used to predict stock movements. And so at the age of 44, he founded Monometrics, a combination of money and econometrics, before he changed the name to Renaissance Technologies in 1982. He used his savings and money earned from previous ventures in academia and working as a cryptographer for the National Security Agency, NSA. By 1982, when he started Renaissance Technologies, he had already accumulated a substantial amount of wealth from his mathematical research, trading in commodities, and working as a consultant. He then raised $20 million from a small group of close colleagues, investors, and himself. Rather than employing traditional Wall Street traders, he assembled a team of scientists, mathematicians, and engineers. Their mission was to harness hard data to develop algorithms capable of identifying patterns within the financial markets. His first trading system was based on analyzing weather patterns and their effect on commodity prices, a strategy that failed spectacularly. He nearly shut down Renaissance after losing 20% in 1 month. His wife convinced him to persist by saying,
"If you quit now, you'll regret it forever."
He then completely switched to pure mathematical models. Then the magic happened. To start hiring, he developed a unique interview technique involving mathematical puzzles embedded in casual conversation, a method still used but never publicly documented. While hedge funds typically hired from Wall Street, he started hiring PhDs who had never traded a stock. His first trading chief was a former codebreaker. His head of research was a computational linguist, and one of his key algorithmic developers studied Sanskrit. Renaissance's first trading algorithm was partially inspired by an obscure pattern Simons noticed in ancient Sanskrit texts about astronomy, which he studied during his time in Columbia. In the early days, it wasn't easy. The markets were chaotic, and few believed that math could really outsmart human intuition. But he was undeterred. Slowly, his team built models, algorithms that didn't just react to the market, but anticipated it. He and his team didn't care about the fundamentals of a company, its CEO, its product, its marketing strategy. For them, everything boiled down to patterns and probabilities. They treated the market like a puzzle to be solved with data. The first Renaissance office had a unique circular design, based on his belief that circular spaces enhanced mathematical thinking, a concept he borrowed from ancient Greek learning centers. But things turned out well for Renaissance, since they went all in on math and science. In 1988, Renaissance launched its flagship, the Medallion Fund. What happened next was nothing short of spectacular. The Medallion Fund posted returns that averaged 66% annually before fees. To put that into perspective, the S&P 500 averaged about 10% over the same period. He had cracked the code.
During the same time, he quietly funded a network of math prodigies in Eastern Europe after the fall of the Soviet Union, several of whom later made breakthrough contributions to quantitative finance without public recognition.
The foundation stone of Renaissance's success came from an obscure mathematical pattern discovered in bond market data by former employee James Axe, who left the firm before it achieved its greatest success.
He also funded a secret project to digitize ancient mathematical manuscripts from the Soviet Union, employing former Russian mathematicians to translate and analyze them for patterns.
In 1992, Renaissance's early system detected a market pattern so profitable that he deliberately introduced noise into their algorithms to avoid drawing attention. This modified approach still yielded returns of over 50% that year, but remained undetected by competitors. Think about that for a second.
While he enjoyed the luxuries of wealth, including yachts and private jets, his true passion lay in helping others and philanthropy. In 1994, he and his wife established a foundation dedicated to advancing research in mathematics and the basic sciences. Over the years, the foundation has contributed billions to various initiatives, particularly in autism research and breakthroughs in astrophysics. The foundation focuses on supporting research in mathematics and the basic sciences. To date, they have donated billions of dollars to projects that range from autism research to advancements in astrophysics. His personal experience with autism, he has a child on the spectrum, has driven much of his philanthropic work in that field.
During the 1997 Asian financial crisis, Medallion Systems identified a pattern in currency fluctuations 2.3 seconds before they occurred. So unbelievable that initially he ordered trading halted to verify it wasn't a system error. He and his team were obsessed with data, and Renaissance's team used machine learning and statistical models to identify tiny inefficiencies in the markets. Trades would be made in milliseconds, buying and selling at lightning speed, often without any human intervention. Their computing power in the early 2000s was reportedly larger than NASA's combined processing capability, with their private fiber optic network stretching from Maine to New Mexico. The Medallion Fund's original server room was cooled by a window air conditioning unit from Sears, and early employees had to monitor it constantly to prevent overheating. During the early 2000s, Renaissance developed a proprietary weather monitoring system that extended across 3 continents, not for trading purposes, but because his team identified subtle correlations between shifts in barometric pressure and bond yields. The firm maintains a quantum physics research division as well that has reportedly made breakthroughs in understanding market microstructure. Findings so advanced that Renaissance chose not to patent them to avoid public disclosure. As Renaissance's methods became more refined, their profits grew exponentially. By the early 2000s, the Medallion Fund had made him a billionaire many times over, and it was closed to outside investors. The strategies were too valuable to share. In 2003, he accidentally discovered a mathematical sequence in options trading that proved a 200-year-old unsolved math theorem related to minimal surfaces that had stumped mathematicians since Euler's time, but chose to keep it private when he realized its potential applications in market prediction and its trading value. And under extreme secrecy, he funded a specialized research lab in Montana that merged astronomical data with market patterns, leading to the discovery of celestial correlations. Market movements supposedly linked to astronomical phenomena that even skeptics couldn't explain. During a remarkable quarter in Q3 2007, Medallion's algorithms achieved a striking 87% accuracy in predicting market movements, a feat many statisticians deemed mathematically improbable in efficient markets. He developed a theoretical framework for market prediction so complex that when presented anonymously at a mathematics conference without mentioning its financial application, it was praised as a breakthrough in chaos theory. Then came 2008, the year of Great Recession and crash. However, it was a golden year for Renaissance technologies. During the 2008 financial crisis, while most funds lost 30 to 50%, Medallion gained 82%, the only major fund to predict and profit from both the housing collapse and subsequent recovery, using pure mathematical models. In a single experimental week in 2008, while markets were crashing, Medallion's algorithms executed more trades than the entire NYSE daily volume, generating $1 billion in profit, their most profitable week ever, though they scaled back immediately to avoid regulatory scrutiny. During one week in 2011, Renaissance's systems predicted market movements with such accuracy that internal compliance officers forced a temporary shutdown, fearing they had accidentally accessed inside information. Investigation revealed it was pure mathematical prediction. In one remarkable year, the Medallion Fund returned 98.2%, proving his theory that mathematics could master markets. Warren Buffett's best year, by comparison, was 66.8%, 98.2%, which is more than 12 times the S&P 500's average annual return of around 8%. Between 1994 and 2014, the Medallion Fund recorded only 3 losing months out of 240, a statistical impossibility in traditional finance, leading to conspiracy theories of market manipulation that were never proven. Let me remind you, from 1988 to 2018, the Medallion Fund averaged returns of 66% annually. If you had invested $1,000 in 1988, by 2018, you would have about $20 million, but here's the catch. The fund was closed to outside investors. The Renaissance Technologies office in Long Island became known as the best physics and mathematics department in the world. except this one was making billions of dollars a year. He revolutionized quantitative trading by assembling an elite team of mathematicians, physicists, and computer scientists rather than traditional Wall Street traders. And for this reason, he was named the Quant King.
Outside of finance, he deeply cared about people. He also established an anonymous fellowship program for mathematicians facing political persecution, helping relocate several scientists whose contributions to the field remain uncredited for their safety. Through his foundation, he committed over $2.7 billion to scientific research in 2018, becoming one of the largest private funders of basic science in the United States. The foundation became larger than the Ford Foundation in terms of scientific research funding in just 8 years, but with a staff 1/10 the size, using algorithmic grant-making processes adapted from Renaissance's trading systems.
Renaissance is super hard to get in. Here's a fact. Renaissance developed a proprietary programming language called Pattern Script, specifically for their algorithms, so advanced that new hires with PhDs reportedly need 6 months just to understand its basic syntax. Medallion's success was so extraordinary that employees were banned from discussing their work even with their families. One former employee said,
"Working at Renaissance was like living in Disney World, but you can never tell anyone what rides you went on."
Renaissance's employee intellectual property agreement is legendary, reportedly 100+ pages long, requiring signers to attribute any mathematical insight they have, even in dreams, to the company for life. The firm employs over 310+ people, including 90+ PhDs, paying an average salary of $500,000+ annually. Renaissance's computers process over 7 terabytes of market data daily, executing approximately 400,000 trades per day. Renaissance's trading algorithms analyze over 29,000 stocks globally, processing data from 60+ markets worldwide. Even before the AI and supercomputer race began among enterprises, under absolute secrecy, Renaissance developed a quantum computing system for market analysis in 2015, in partnership with an unnamed tech giant, that could process market scenarios 1 million times faster than conventional computers. Renaissance Technologies has earned over $100 billion on the trading profits since its inception, surpassing the legendary firms of Soros and Bridgewater. The firm maintains a secret internal journal of mathematical discoveries that's never been published, rumored to contain breakthroughs that extend beyond finance into pure mathematics.
This mathematical genius who revolutionized Wall Street, who built the most successful quantitative trading firm in history, who donated billions to science and mathematics research. This was Jim Simons, the legendary founder of Renaissance Technologies, who passed away on May 10th, 24, leaving behind a legacy that transformed both finance and mathematics forever.
Despite his massive wealth, he continued driving his old Volkswagen Beetle and teaching math to high school students well into his billionaire years. He maintained a hidden mathematics library in his Long Island home, containing rare unpublished papers from renowned mathematicians, including several that never made it to public archives. He continued to smoke 2 packs of cigarettes a day well into his successful years, often solving complex mathematical problems while chain smoking. Despite running one of the most sophisticated trading operations in history, he doesn't use a computer himself and prefers face-to-face meetings over email. Born to a Jewish family, he worked as a floor sweeper before becoming a mathematics prodigy and eventually the world's most successful quantitative trader. His story is of hope, grit, and passion above all.
This is the story of the Quant King, Jim Simons.